Hello everybody, Jeremy here. Today I'm going to talk about a couple super high yield dividend stocks that were recently purchased by one of the industry's top billionaire hedge fund leaders, David Tepper. Now I own both of these stocks already. I have for years, but when I saw recently that he made some pretty big purchases in both of these companies, I got super excited. Now I was planning on doing some separate videos about both of these companies, but I decided, why not talk about David Tepper buying these as well? I figure it would be a perfect combination, like peanut butter and jelly, or Siegfried and Roy. No, that didn't turn out so well. Never mind. Now I've always liked David Tepper. I've really admired him. He grew up in a rough area in Pittsburgh, pretty much started with nothing. He's a real rags to riches story.
A kid who couldn't afford to go to an NFL game until well into his 20s, is on the verge of getting the NFL's approval to buy the Carolina Panthers.
He's done so well he was even able to buy the Carolina Panthers. Rawr. After being passed up for partner for Goldman Sachs, he co-founded Appaloosa Management, a very successful hedge fund. Years ago, he rose to fame by aggressively buying debt from distressed companies and countries. He was able to buy at extreme value, and it has really paid off. So what stocks am I here to talk about that Mr. Tepper just added to his portfolio? Let's start with Enterprise Products Partners LP. They're a limited partnership, a midstream to be exact. They focus on oil and gas. I can't remember, but I think they might be the original midstream company in my portfolio. They've been around quite a while, like the late 60s. They've got a market cap of about $50 billion. Along with all their other peers, COVID definitely hurt all the oil companies in 2020. That being said, almost half of their cash flow was free flow cash flow in 2020. Not only did that enable them to keep paying their pretty fat dividend, but they were also able to raise it during the 2020 crisis. Their average price forecast for the year is about $27 a share. Given their current stock price, that's about a 20% upside along with a over 7% dividend payout. And overall, most stock analysts have a very strong outlook for EPD. And just so you know, Tepper bought a little bit over 1 million shares last year. That's nowhere near the amount of shares that I have. I have a lot less. The next stock I want to talk about is MPLX, Marathon Petroleum. MPLX runs oil and gas across the Rocky Mountains, Midwest, Gulf Coast to storage and distribution facilities. Even with COVID plummeting their stock price last year, they were still able to pay over $3 billion in dividends to their shareholders.
That's a lot of nuts!
Kind of makes you want to invest in all of these high yield dividend companies, doesn't it? That's what I did, and I don't work anymore. Speaking of their stock price diving last year, their stock price value is up almost 300% from the lows of 2020. I literally caught about half of this. I haven't added any shares to my position because right now my position is in the mid $15 range. And with a quarterly dividend payout of just under 69 cents a share, my dividend yield with MPLX is just over 17%. Now their year price forecast does show some upside, about 7%. But what I love the most about these guys is if you were to buy their shares today, you're going to be yielding over 10% annually. This is a perfect stock for people like me that live off of their dividend income. And going back to David Tepper, he picked up about 3.5 million shares in the last quarter last year. Both of these stocks are very affordable as well. Between the two, they're in the mid $20 range. And as you can see from tip ranks, for whatever that's worth, they both have a strong buy rating. And I really like David Tepper, and when I saw that he owns both these stocks, I got really happy. In the comments, tell me how likely you are to invest in the oil and gas industry. It's no secret that the current administration is no fan of fossil fuels. That being said, personally, I still think that there's a future for this industry. And with that, please consider liking and subscribing. I'm running a sale today. It's absolutely free. But seriously, for someone like me with a super small channel, it helps out immensely. Now, as I have said before, I am not a professional finance advisor, and I am not pushing these stocks. But I do own both of these companies and they have worked well for me. So thanks for tuning in, and remember, in a couple days I've got the next chapter in the High Yield Dividend Challenge giveaway. See you soon. Bye.